point to make is that all the forecasts for economic growth for 2021 are being upgraded, and I just highlight the revision to the Bank of England's forecast that we saw at their last meeting, where they're now forecasting growth this year of 7.25%. So, and I think that's reflected in what we're seeing in the manufacturing PMIs, and where we had a laggard, and this is where today is relevant to answer your question, is actually in the service sector PMI. So whereas the manufacturing PMIs recovered in February and March and are now well above 60, I think what we're going to see in May and June is quite a big jump in the service sector PMI. So in terms of, is it a big day for the UK? Yes, we're seeing this opening of the service sector. That's terribly important for areas like leisure and hospitality. And I think the key point is that it will underpin this second quarter recovery in the UK economy. That in turn probably has negative implications for the gilt market, and I think that you're probably going to see 10-year gilts trade off towards 1% by the end of June, 85 basis points now. And it probably does underpin the FTSE 100 and the FTSE All Share. They have outperformed the DAX and the Euro stocks over the last month. I think that will continue.
Bob, it's been a rolling opening theme from the China markets to the United States with the accelerated vaccination program, now to the UK, and of course Europe is the area we're watching next as well. Where is the recovery trade? Because it felt like some of that theme had been stolen by these inflation fears that flared up on markets. Do you think there's much left for the European markets at this stage on a catch-up trade?
I think you've got to sort of divorce what's happening in the economy, which I think is increasingly positive. And rather like we're seeing this acceleration in the service sector PMI in the UK. I think for May and June, you will see a similar pattern in Europe. Obviously, the figures are distorted year on year by base effects, because let's not forget that this time last year was sort of the peak of the crisis in the whole of Europe. So year on year numbers are going to look spectacular. But I think May and June will see across the Eurozone a very strong uplift in the service sector activity and consumption, against a background where, of course, the last 2 to 3 months we've seen the manufacturing numbers looking so good. Now, a word of caution, however. So although the economy looks good, I think the big challenge for equity markets worldwide, and particularly the States and Europe, is that I think the bad inflation numbers that we saw in April are going to get potentially worse in May and June. And therefore, we could see a repeat of what we saw in February, which is a short-term rise in bond yields. And when we've got US inflation, for example, over 4% and 10-year treasuries at 1.6%, you have to ask the question, why do you want to be long bond markets at the moment? So I do think probably a rise in bond yields in May and June, and that I think will certainly restrain equity markets. So to answer your question on the reflation trade, I think a word of caution for the next 6 weeks or so.